Apparently, Bitcoin will go to 120k in the next 1.5 years. This is the new prediction made by Standard Chartered, and it is published across several different outlets. And of course, Crypto YouTube is jumping on this as well. Everyone is talking about this new price target. Now, I don't necessarily think that the price target itself is problematic, but the reasoning for that price target does not make much sense to me. The reasoning is that Bitcoin mining became profitable enough that the miners don't have to sell their Bitcoin. They can hold on to the newly minted supply, reducing what's circulating and thus creating a supply squeeze. Low supply, big demand, increasing price. But is this really what we are seeing by the miners? So first, here's the justification for this 120k target. Increased miner profitability per Bitcoin mined means miners can sell less of their output while maintaining cash inflows, reducing net Bitcoin supply and thus pushing their prices higher, according to the report. Same thing over here, right? It's the supply dynamics, and the miners are selling less BTC, creating an imbalance that will tip in the bulls' favor. But here the exact opposite news. Bitcoin miners are pivoting to new markets and making bank. So that's just a Medium article, but then here on the crypt.co, Bitcoin miners are pivoting in search of profits and hedging their bets, using some of the computing power for high performance computing, HPC. And so what's really going on? Are the miners selling here? Is mining as profitable as it has ever been? Now here's the beauty of the blockchain again. We can look at the data. We can see what are the big miners doing. Are they selling? Are they moving their Bitcoin, or are they keeping it in their storage? This here is a 1-year chart. CryptoQuant.com, miner to exchange flow. And let's look at this. In the last 12 months, the miners have in aggregate been selling very rapidly. Pretty much since the middle of June. So for the last 4 weeks, a lot of selling happened. A lot of miners moved their coins to exchanges. And this kind of makes sense because when we look at the Bitcoin hash rate, it is at an all-time high. So mining becomes really competitive. A lot of computing power hits the Bitcoin network, but the Bitcoin that's getting issued is not increasing, right? That's fixed. It gets cut in half every 4 years. Now, when the price of Bitcoin isn't increasing, meanwhile, if the price stays stable, then the input, the computing input that you provide to the network gets compensated less and less. So the way I see this is that Bitcoin miners are actually under quite a bit of pressure. Why else would they be selling? And so I have no idea where this prediction of the 120k comes from. That miner profitability is going up, that miners are keeping on to their Bitcoin. They don't have to apparently sell any Bitcoin to cover their electricity costs. I don't see this in the data. Now, this doesn't mean that I disagree with 120k in 1.5 years per se, but the reasoning here seems pretty flawed to me. I think this report is overhyped. I think it's wrong that all of those YouTubers are jumping on this topic. It's nice to see more support, but we have to stay objective. We have to look at what the data is actually saying. And there are data points that are very bullish. For example, the small wallets, they buy up Bitcoin quicker than it is being mined in aggregate. So the miners, they might be selling, they might be holding on, but in the end, there is only that much that can be mined. This is topped out. And if the purchasing already accelerates whatever can be mined, this is net positive. And when hash rate increases over time, this is of course also good for securing the network, for making it more robust against potential attacks. Let's discuss potential price targets in Telegram. There's an official Telegram group. Simply search for Bitcoin Strategy Channel within the Telegram app or click on the link down below. I hang around there regularly, looking forward to chatting with you. Bye-bye.